It was October 1st, 2020. The COVID-19 pandemic was raging and quarantines were rampant. But Takashi Tanaka spent the entire day in front of his computer analyzing the trends and determining the most probable market swings. Takashi was typing as fast as humanly possible. The email with detailed investment instructions had to be finished by the end of the day or his investors would lose millions. The Tokyo Stock Exchange was frozen for 24 hours because of a hardware malfunction. From experience, Tanaka knew that as soon as trading resumed on October 2nd, his investors could stand to make millions in profit. If he could just finish the darn letter. Takashi Tanaka was the only investor who saw beyond the glitch. While most investors were angry with the fact that they couldn't execute their trades daily, Takashi Tanaka focused on the future. Since its establishment on May 15, 1878, the Tokyo Stock Exchange, or TSE, has been at the helm of the financial industry. Before the war, it was just an ordinary exchange. However, during the war, the government combined it with 11 other exchanges in Japan to form what we now know as the TSE. This stock exchange, which is a subsidiary of Japan Exchange Group, accounted for 60% of the world's stock market cap from 1983 until 1990. After the invention of high-speed trading, though, the TSE fell significantly behind due to tech problems, like the glitch of October 2020. Takashi Tanaka knew that there was nothing to be done on the day of the October glitch. However, he knew that glitches like this happen. He was an experienced investor and a seasoned financial advisor. He has made reasonable predictions about what stocks will do in the future by just studying the past. As a student of history, specifically stock market history, Takashi Tanaka knew that glitches like these were common. They happened in the past with the invention of high-speed trading and online trading platforms. Basically, a glitch happens for two reasons: a cyber attack or a hardware malfunction. The New Zealand Stock Exchange was recently a victim of a cyber attack, but after a quick analysis of the one-day delay, Tanaka realized that this was different. It had to be a hardware issue. Basically, stock exchanges require complex software to run all the transactions. On the Tokyo Stock Exchange, those transactions are $22 billion in a day. Handling all those trades takes a lot of computing power, and whenever computers are involved, there's a high chance that something is going to go wrong. These are usually short-lived, as the stock exchanges employ an army of engineers to fix the problem. In the meantime, the backup boots up and runs the system in the background. Since they delayed trading for an entire day, this told Tanaka that the backup system failed to start, and the TSE crashed. Tanaka didn't lose his cool-headedness during the meltdown. He stayed rational and began developing a strategy of attack for the next day. After all, he knew that other exchanges experienced delays like this in the past. Glitches like the one on October 1st happen. Not often, but they do happen. CLSA Japan strategist Nicholas Smith pointed out that there was nothing exclusively Japanese about this glitch. For example, in July of 2015, the New York Stock Exchange shut down for about 3 to 4 hours. The hardware broke down and the backup failed to load. The reason it didn't load is because the safeguard didn't kick in. There was a problem in the setup and everything crashed in a couple of minutes. But they fixed it promptly and trading resumed in no time. There was also the flash freeze of the Nasdaq back in 2013. And how can we forget the half-day freeze of 2005 when the upgrade to the system went bust and no one could trade for the remainder of the day? Until the October 1st glitch, this was the last system-wide failure in Japan. With the rise of high-frequency trading, even well-established exchanges, like Xetra from Germany, still experienced difficulties. They had 2 blackouts in 1 year. The first one was in April, and the second one came 3 months later in July. And Takashi knew all about these examples. Since his reputation as a great financial analyst helped him get dedicated followers, aka investors, who were ready to take the initiative at his command, Tanaka was ready to strike. All he had to do was devise a plan of action. So Takashi Tanaka locked himself in his home office and started developing the $1 million strategy. He analyzed to see which groups of stock performed well after a delay like this. He tested the hypothesis very quickly and began writing a letter to his group of investors, telling them exactly what to do. And to think, just a few hours ago, everything was fine. In the early morning of an average Thursday, the Japan Exchange Group, the operator of the Tokyo Stock Exchange, made an announcement that the start of the trading session would be postponed. What is seriously strange about the TSE glitch of October 1st is the fact that the exchange shut down for an entire day. Just like the NYSE, the TSE thought they would fix the problem in 1 to 3 hours and traders would barely notice the delay. However, that didn't happen. After the hardware broke down, the system couldn't switch to the automatic backup. When they realized that it would take them an entire day, the Japan Exchange Group issued a public apology at 12 o'clock on Thursday, October 1st, 2020. They told investors and day traders that the exchange would stop for a day, but they assured that normal operations would resume the following day. Even though the Japanese government was one of the most effective in the world at dealing with the COVID-19 pandemic, the stock market still took a hit. And with the subsequent one-day glitch, the confidence in Japanese trading platforms became even less popular. Traders were very upset with TSE because they were unable to liquidate their positions. With 3,700 companies listed on the TSE and $6.2 trillion worth of stock on the exchange, this was a serious problem. After all, this is the third largest stock exchange, following right behind the New York Stock Exchange and NASDAQ. And the worst part is, it didn't stop there. The glitch spread to neighboring towns and cities. Fukuoka, Nagoya, and Sapporo all experienced delays in their system and were unable to process the trades for the day. These exchanges all relied on the same Arrowhead system that TSE uses, so the glitch was inevitable for them as well. To make matters worse, the after-hours trading had to be stopped as well. This was especially bad when you consider that in mainland China and South Korea, it was the period of the autumn holidays. So, the exchanges in Taiwan and Hong Kong were closed. Basically, the entire region went silent for what seemed like an eternity. The one glimmering light of hope during this whole fiasco was the fact that the trading in Osaka was unfazed by the glitch in Tokyo. That, and the fact that the one-day hit happened after the presidential debate in the USA. According to Mr. Kabuta, if this happened just one day prior, before the presidential election, then most of their short-term investors would have lost a grand opportunity to make substantial profits. Luckily, the debate already took place, and the angry investors quickly calmed down. Still, brokerage companies like Monex said that their investors had no chance to capitalize on the growth in price that happened after the presidential debate. According to Takashi Hiroki, the chief strategist for Money, the timing couldn't have been worse. Others, like William de Gale from the UK and manager from Blue Box Global Technology Fund, said it hasn't affected our trading, as we didn't have any orders for Japan overnight, but it does mean we don't have a fresh price for our Japanese holdings. The following Friday, 24 hours after the glitch, they fixed the problem. Trading resumed as usual. Still, analysts and financial advisors like Edward J. Rogers of Rogers Investment Advisors said that this reflects poorly on the Tokyo Exchange. While the TSE and Fujitsu were busy trying to fix the problem, Tanaka was busy developing an investment strategy. Not only did he analyze the stock exchange glitches that happened previously, but he also factored in the effect the US presidential debate would have on the stock market. With a firm strategy in hand, he began sharing his insights with his followers. He got on financial forums and sent a letter to his insider group of investors. He told them exactly what to do the following Friday. And because he remained calm while everyone else was panicking, Tanaka managed to convince a lot more investors to take him up on the strategy. He identified possible market movers and how this would affect different industries in the stock market. His strategy contained stock recommendations. They were chosen based on how probable they were to experience a giant price swing in either direction. Everyone was waiting for the trade floors to open on October 2nd. They were all eager to test Takashi Tanaka's new investment strategy. As the overnight rise on Wall Street was happening, the Japanese investors were getting ready to cash in. A few hours remained before the investment advice Takashi Tanaka preached would be put to the test. The following morning, Takashi Tanaka, along with the insider group of investors who took him up on the advice, cashed in. Even though the stock market was down 5% since the start of the year, it experienced an increase the next morning. Tanaka and the investors seized this opportunity and made a killing. The trades were spot on. The strategy was almost bulletproof, and the only bottleneck to how much profit his investors generated that one day depended on how much money they had allocated for investing. Thanks to the TSE glitch of October 1st, Takashi Tanaka solidified his expertise in the world of Japanese finance. He became one of the most respected financial analysts and one of the most sought-after advisors in the country. However, not everyone was having such a good time. You see, when a major exchange fails, someone has to be held accountable for the day-long delay, which some estimate cost traders $28 billion. When you're handling $22 billion every single day, it's normal to expect a thorough investigation after the glitch. The government, as well as the owner of the exchange, got involved. Following the denial of access attack that the New Zealand Stock Exchange suffered, the officials thought this could have been a cyber attack. However, after a thorough investigation, they ruled out this possibility. The software used by the TSE was built in such a way that didn't allow external access. Only people on the inside could get in. The system was built by Fujitsu Limited and was called Arrowhead. It was introduced back in 2010 because the trading volume on the exchange increased. To meet the growing demands, the Japan Exchange Group tasked Fujitsu with building a brand new system for the TSE. As the creators of the system, Fujitsu also worked hard to solve the glitch, but it all seemed pointless. The more they tried to fix it, the worse it got. After the investigation, the president of the Japan Exchange Group, Koichiro Mitahara, stated, "We have created considerable difficulties for many market participants and investors, and for that, I am profoundly sorry. We are considering every measure to prevent this from reoccurring." Mitahara even attended a news conference the very same day the glitch happened, trying to mitigate the damage. However, by then, it was too late. The Financial Services Agency, or FSA, got involved, and they said that the only way to ensure incidents like these don't happen in the future is by taking administrative action. That was code for heads will roll. So on November 30th, 2020, President Koichiro Mitahara submitted his resignation. It was effective immediately. And since the TSE needed a president, Akira Kyoto, the CEO of the Japan Exchange Group, took control of operations for a brief period of time until a new president was appointed. This came immediately after the FSA announced that they require two things. One, specific rules of how trading will resume once the glitch is fixed, and two, list of people responsible for such a massive system failure. According to Jeffrey Halley, the senior market analyst for Asia Pacific at Owanda, it is actually not a great day for this to have happened, to be honest, because it's the first day of the second half year of the Japanese financial year. It's the start of the new quarter, it's the start of the month. We normally see a large amount of institutional portfolio rebalancing flows coming into the exchange on this day, and those trades will not be able to be executed. Adding salt to injury, the Bank of Japan released its quarterly business sentiment survey. The analysis showed that business sentiment improved following an 11-year low hit. So they were expecting more investors to buy stock following the publication of this study, but that didn't happen, thanks to the October glitch. Even though Tanaka made a name for himself as a prodigious investor who had a knack for picking stocks, something happened in his life. He no longer wanted to be in the spotlight. Instead of taking his newly acquired fame to start a brokerage firm, as many investors do, Takashi completely retreated from the public. No one knows where he is right now. While doing research, it appears that Tanaka has no social media and is inaccessible to investors. We don't know why he retreated from the spotlight, but it wouldn't be the first time a successful trader retreated from the glamour of the investing world. For example, Beam Rickert, the character that Brad Pitt played in The Big Shot, was actually based on Ben Hockett. He was a real-world banker who was very successful, but retreated to a small cabin in the woods and lived out his life far away from everything related to Wall Street. Brad Pitt gave an amazing performance of a very secretive character. When doing research on Ben Hockett for the movie, the actor found out that the former Wall Street banker is a survivalist who's living in Berkeley, California. Pitt also added that Hockett's home is inaccessible by car, which means if anyone decides to meet Hockett, they would have to do a very long walk. Just like in the movie, in real life, Hockett teamed up with two of his neighbors. Using his brilliant expertise and knowledge of the stock market, the three men managed to make a killing during the financial meltdown of the subprime mortgage crisis of 2008. Having lived through many crises in the past, Hockett had a hunch of what was about to happen in 2008, so he helped two young guys get filthy rich on the back of immoral Wall Street bankers. But after earning millions with a single trade, Hockett again retreated to his quiet life in the woods. Currently, there is no pictures of him and very few people know what he looks like today. Something similar happened to Takashi Tanaka. After he retired from the fast-paced world of investing, very few people know what he's doing today. Whatever he's doing, one thing is certain. His group of investors surely misses him and wants him to share his investment strategies with them once more. Maybe a new glitch or financial crisis will prompt him to send a mail detailing a new investment strategy he's been working on since his retirement. If you'd like to learn more about prodigy investors on Wall Street and across the world who make millions trading, then make sure to subscribe to our channel.